If I gave you two options, which would you choose? Option 1. Make money fast, but risk losing it just as fast. Or option 2. Build wealth slowly, but consistently over time. Which one sounds better to you? Most beginners think trading is the fastest way to get rich in the stock market. But here's the truth. Most traders lose money, while most long-term investors build wealth. It's a crucial distinction. In this video, I'll break down the real difference between trading and investing. We'll see which is better for beginners, and which one actually gives you a higher probability of success. Let's start with the basics. Trading means buying and selling stocks quickly, sometimes within minutes, hours, or just a few days. Traders focus on short-term price movements. They analyze charts and patterns, trying to predict stock direction. Investing is different. It means buying a company and holding it for years. Investors don't care about tomorrow's price. They care about where the company will be in 5, 10, or 20 years. Think of someone who bought Apple 15 years ago. They didn't need to trade daily. They just stayed patient. Over time, the company grew, revenue grew, and stock price grew. That's investing. Now, let's talk about risk. Trading is high stress. You need to watch the market constantly. Prices move fast, and emotions take control. Fear, greed, FOMO. When emotions control decisions, mistakes happen. Studies consistently show that most short-term traders underperform the market. It's a tough game. Investing, on the other hand, is boring. But boring is powerful. When you invest long-term in strong companies, you benefit from company growth, dividends, compounding, and time in the market. Time is your biggest advantage. Here's something beginners don't realize. Trading requires skill, experience, discipline, and emotional control. Investing, however, primarily requires patience. That's it. Now, does that mean trading is bad? No. Professional traders exist, but they treat it like a full-time job. It's a serious profession. They use strict risk management and accept losses as part of the process. Beginners usually do something different. They watch a few videos, see someone make quick profit, and jump in without a plan. That's when problems start. Let's compare clearly. Trading is short-term, high stress, high risk, requires constant monitoring, and involves emotional pressure. Investing is long-term, lower stress, historically proven growth, less time required, and offers a compounding advantage. So, which one is better for beginners? If you are new, don't have years of market experience, or don't want to stare at charts all day, long-term investing is statistically the smarter path. Wealth in the stock market is not built overnight. It is built over time, slowly, consistently, with discipline. The biggest mistake beginners make is chasing speed. But in the market, speed usually benefits professionals. Patience benefits beginners. Let me leave you with this thought. If trading was easy, everyone would be rich. But building wealth through long-term investing has worked for decades. And it continues to work for those who understand time's power. In tomorrow's video, we'll talk about something even more important. How to pick your first stock as a beginner, without guessing, and without gambling. That's where most people get confused. So if you're serious about learning step by step, make sure you subscribe to Dollar Radar and turn on notifications. Because we're building financial knowledge the right way, one lesson at a time. And remember, in the stock market, the goal isn't to get rich fast. It's to stay in the game long enough to let compounding work for you. I'll see you in day 5.